Hi everyone, let's go over my medium time frame, low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin and the probabilities of the different scenarios, starting with the medium time frame and low time frame scenarios, just to give you perspective of where we are on the micro when we're gonna jump in later into that section in this video. Starting then with the bearish medium time frame scenario, where we are looking for a three-wave structure to the downside in a WXY, where a wave Y is a three-wave structure to the downside. Now, as you can see, this has then to be the end of a wave X with then the invalidation at 31.4k. And the main reason is that a wave X has to be a three-wave structure. And as this is an impulse, we're going to be looking at an A, B, and then a C wave to the upside in an expanding flat. The most common target for a wave C in an expanding flat is between the two 1.618. So going above this area once again is definitely not going to be looking good for another move towards the downside in a wave Y, as again this is the max target for a wave C, so you actually want to see a reversal. Now already on the 12-hour candle started closing above the 1.618, which is not really something that I like to see. So that is something to take into account. And also the most common target for wave Y, which is between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, is basically at the same level as price already visited once before. And that doesn't really make too much sense for me. We do have some target areas and support areas over here, but in a corrective structure, especially a sideways corrective structure, I would like wave Y to go to a support area that hasn't yet been tested. So in the yellow target box over here, the strongest support was the weekly naked point of control, which has been touched and gave this move to the upside. But this doesn't really make sense to me to go down to the same area again for then potentially a bigger bounce, right, on the high time frame scenarios for a bigger move towards the upside. If we go to the more bullish scenario, this looks better at the moment with a three-wave structure that is already finished, for then this to be a wave 1. Because once you get an impulse to the upside, you always have to think, is this a wave 1? Is this a wave C? Or is it a wave A? Now, when we look at market structure and also the high time frame scenarios, this being a wave A is not really something I'm looking for. This being a wave C, well, we just spoke about it being a wave C with the 1.618, so the one left is this being a wave 1. If we look for a wave 1, we're then going to be looking for a corrective wave 2. A corrective wave 2 is a three-wave structure. Most common targets for a wave 2 are between the 0.5 and the 0.786 Fibonacci, taken from the low of Y to the high of this wave 1. The 382 and the 886 are rare targets, and the 0.236 is a very rare target for a wave 2, only really hit in very bullish market structures. And if we zoom into this scenario, then you can see that over here we have a wave 2 that hit the 0.236 before liftoff towards the upside. So it is possible, it's just not really common that it happens. And that gives us a certain trade-off that you can read in the text box over here. Because if this is the low of wave 2, it has a very, very shallow retracement hitting the 236, but time-wise, it ended between the 0.618 and the 1-to-1 fib time taken from the low to the high of wave 1, which is nice for a wave 2. So time is good, but a very low retracement. Or this is only the beginning, and we're going to be looking for a deeper three-wave structure, which is going to go towards the 382, as we still have a little bit of support there as well, around 29k, which is very, very interesting and can give this potential setup over here as well. But that means that price still has to move to the downside. So we're going to have a much longer sideways correction for a wave 2, but we get a better retracement. At least better is in between those little brackets, because the 382 is still a rare target for a wave 2, but at least it looks a bit better than the 236. So that is the trade-off. And if we get that move to the downside, well, that depends on the micro scenarios. So let's jump in to the micro scenarios, as a lot has happened overnight as well, or actually after my previous video where I mentioned the probabilities when price was ranging over here, probabilities were to the downside, right? So we were looking for a move down. Now this potential diagonal has been invalidated. So in this particular scenario, we were potentially looking for a 1, 2, 3, 4, and then a wave 5 diagonal structure where the lower trend line of the channel is not allowed to be hit, because then you have a channel and not a diagonal, right? A contracting diagonal, you want to see the trend lines contracting to one another, meaning the upper trend line of the channel and then a lower trend line moving upwards. But as you can see, if I zoom in, the lower trend line area has been hit. Now, actually quite funny that price moved to the downside still inside this red triangle, but it did hit the lower trend line of the channel, and therefore this diagonal scenario is invalidated, so we can remove it. In the impulsive scenario, we were looking for a 1, 2, 3, 4, 5. Now, this was also a bit of an alternative compared to surely the bearish scenarios, because this wave 3 is extremely short. This wave 3, usually the minimum target is the 1.618 sitting over here inside the 32K area, but you can see this wave 3 is not even close to reaching that area. Now, this wave 1 is also longer than this wave 3 in price, meaning that wave 3 is not allowed to be the shortest wave, so wave 5 has to be shorter in an impulsive structure. So wave 5 had to be lower than the 1-to-1 over here. Also, an extended wave 1 over here wouldn't really work with the scenario, because an extended wave 1, if we get an impulse with an extended wave 1, you take a trend-based fib extension from the low of 1 to the high of 1 to the low of 2, and then you toggle on these fibs over here. And this is the target area for a wave 5 if wave 1 is extended. Now wave 1 is longer than 3 and has to be longer than 5, because else the whole impulsive structure is invalidated. So this then would be the target for a wave 5, but as you can see, this 3 already moved beyond it. So this scenario was very unlikely, and also now has been invalidated as price has moved towards the downside, hitting the invalidation because a wave 4 is not allowed to have overlap with a wave 1. So we can remove that one as well. And if we then look at this scenario, a 1-2-1-2 setup, well, this is the only one that is still there for the bulls, mainly because a 1-2-1-2 setup, you want overlap with wave 1 preferably, and it doesn't invalidate it for sure. The only thing that's not really nice about this 1-2-1-2 scenario is that this second wave 1 over here is much longer in time compared to the first wave 1, which is not something you like to see. Preferably in a triple 1-2 scenario or a double 1-2, you want to see a 1-2, 1-2, and then a third 1-2, creating a diagonal where each of the impulsive structures are going to be shorter in time, as well as the corrective structures are going to be shorter in time. But that is not the case over here, right? This wave 1 is clearly longer than this wave 1. So also this one doesn't really look that great, but it is the only scenario for the bulls, but low probabilities at the moment. If we then go towards trading psychology, one of my favorite things to talk about, I actually want to talk about something here. So we have a double top at 31.4K. We have high number 1 and we have high number 2. Now over here we also have the 886, where price has ranged for a while, right? The red line over here, you can see price has been ranging around the 886 for a while now. If price is ranging around the 886, probabilities increase a lot for price to take this high. Of course, price is moving down now, backtesting the golden pocket, more about that in a second. But once the 886 has been tested, what you actually want to see is a direct move down. Now we've been ranging here, higher probability to take this high. And if we think about trading psychology, what would be really nice is to move towards the upside, take at least the double top that we have at 31.4K to bait people, right? That's what we want to do. Market makers, right? Retail, you want to move to the upside. People might think, yo, we're going to have continuation, right? I've seen online on some of the how do you call them? The moon channels, let's say, like this is a consolidation pattern type of thing, right? And when we break out, we're going to go to the moon, that type of stuff. So if we can break out, catch all the shorts that are over here, right? People with short positions put their stop losses above these highs, so you stop them out. Then you have the breakout traders that are going to be longing based on the moon boy stuff, right? And they're going to be looking for these type of moves. So probably their stop loss is going to be below the low over here, or here, or here, either or. But then instead, what I think would be absolutely brilliant is move to the upside, grab the highs, then move one more time to the downside, trigger all the stop losses that are over here, and then later you continue towards the upside. I think that would be very attractive, and that's what happens in this scenario. So here we are looking for a WXY, which is then a 3, 3 and a 3 wave structure to the downside, where the most common target for wave Y is between the 1 and the 1.236 Fibonacci, taken from the high to the low of W to the high of wave X, which is in confluence with the target box around 29k. So that is super interesting, right? Now in this scenario, for price to come down, it can of course go down in a straight line, which is the other scenario, or we have this scenario I just explained, where price could maybe find one more move towards the upside, which I think is the most interesting one. So in this scenario, what I think is nice is currently price is bouncing on the target box that we had, right? Which is between 30.7k and 30.5k. And in this area, what we have is we have 2 point of controls at 36.75, which has been tagged, creating this little bounce towards the upside. And we still have another one at 30.5k. So maybe hitting the lower one, then move towards the upside, where you can see we have some resistance over here, so maybe a bit of a bounce, and then continue up, go towards the most common target area for a wave B, which is between the 1.236 and the 1.38 Fibonacci, taken from the high of X to then the potential low that we get somewhere at the lower end of the target box. And you can see the 1.38, first of all, it's above the double top, but secondly, the white line that you see over here is one of the 3 2022 range highs, for maybe then a liquidity grab here and then a move to the downside. Could be very interesting, could also be very volatile, but we still have some news going on this week, which I will show you in a second, for maybe this to help this play out, basically, right? So this is a very interesting scenario indeed. And then in wave W, we had a WXY. Then X can be any correction, a zigzag, 535 most likely over here, and an A, B, and then a wave C. And then in a wave Y, we have an expanding flat, which I think would be very nice indeed. Or this expanding flat can only be the beginning, the first structure of, again, a WXY to the downside. So preferably price going to the downside still a little bit more, then up and then down. That's something I'd be looking for. In the other scenario that we have, which is an ABC bearish scenario, we'll be looking at a 3-wave A, 3-wave B, and a 5-wave C. This is a regular flat. Minimum target for wave B is the 0.9, which has been tagged. And then you want to see an impulsive structure to the downside. And this is where the 3 text boxes come in. So if we zoom in to what has happened on the lower time frame, I have something to say about the impulsive structures to the downside. So let's start with the impulse one. If we're going to be looking for an impulse, 1, 2, 3, 4, 5-wave move to the downside for then a correction up and continuation, then this wave 3 is the shortest wave. And that is not allowed because this wave 1 is longer than this wave 3 and this wave 5 is also longer. This one over here, and that's not allowed. So that is then invalidated. So we can remove this from the chart. Then if we would be looking for a diagonal, which then is something like this, right? In this scenario, in a diagonal, each wave has to be shorter than the previous one. So wave 3 is shorter than wave 1, which is true, but this wave 5 is longer than wave 3. And you can see it if I pull a trend-based fib from the high to the low of 3 to the high of 4, you can see that the 1-to-1 has been tagged, not allowed in a diagonal. So therefore, this is also not a scenario I'm looking for. Then you have the 1-1-2. Now 1-1-2, that's quite unique. Again, usually you want to see a diagonal in a 1-1-2 as well, where again, this move is a little bit big, right? But okay. The second wave 2 is too long. Again, so this wave 2 over here, and then a 1-2, 1-2, 1-2, and then you get a bigger 3 to the downside. This wave 2 is longer than this wave 2 over here, even though this wave 2 is of a higher degree, because each 1-2 is a lower degree. This is the highest degree 1, lower degree 1, even lower degree 1. And each time the impulse to the downside should preferably take less time, and the corrections also taking less time. But this correction takes longer than this one, and currently this one is also longer than this one. So that is something that, you know, makes you think twice. Does it invalidate it? No, but it is something to think about. Then also the third wave 2, as mentioned, is too long. The diagonal is invalid, but then again, this is the only scenario from an impulsive structure to the downside that is valid. So if price is now going to move to the downside, and it does so on high volume, right, we're not going to be looking for that bounce towards the upside. If price moves down on lower volume, takes the daily naked point of control over here, gets a bit of a bounce, right, and then starts to move up, that could be interesting for then the other scenario to play out. So it's definitely a volume game over here for price. If it moves to the downside, what is it gonna do over here? And if I open all of my support areas that I have around these around this target box, you can see current monthly point of control, daily and time naked point of control, but below that it's one empty big space. So if price is going to manage to enter this space over here, then my target, my eyes are going to be on 29k. So this has to be the support area, in my opinion, for price to find that move to the upside and tag the double top. If we then look at the CVD Divergences, my favorite tool, then we're going to zoom in over here. First of all, by the way, yesterday we had bullish divergences that played out, 2 bearish divergences that also played out. Now this morning over here, what can we see? Of course, the divergences are neutralized, making a new low over here. So then we can have a new look at what's been happening. Price moving to the upside, CVD is also moving towards the upside. Bit of bullish CVD over here, higher low on price, lower low on the yellow CVD for then the move to the upside. Target already hit, so that is quite nice. But now at the moment as it stands, not too much is happening. No bullish divergences over here, maybe, but yeah, it's very, very neutral, so not too interesting. And then the news that we have today, 8 p.m. Central East European time, is going to be very, very interesting. So make sure to trade safe around 8 p.m. And then finally, let's jump into the probabilities section, right? So my main preferred scenario at the moment is this micro bearish scenario, right? I spoke about it, I explained it. Trading psychology wise, it's a brilliant scenario, and this is just very, very interesting. The second scenario then, from like, you know, this basically the preferred second one is actually still a bearish one, because the bearish scenarios have a higher probability at the moment. But if we have to pick a bullish one, then the 1-2-1-2 is the only one that I can find at the moment. It's very difficult right now to think of a solid bullish scenario, and therefore that's also why the 2 bearish ones have a higher probability. And from a trading psychology point of view, man, I would love this to happen, right? Everyone breaking out, breakout longs and all that stuff. That would be brilliant. So I hope this video was helpful or valuable to you. Please check out the most recent educational video that I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.